Over the last 2 days, I've been digging through trading data from early Monday morning, and what showed up in those records is one of the most revealing financial stories connected to this entire conflict. The surprising part is that it isn't really about bombs or missiles at all. It's about what happened inside the financial markets just minutes before a major announcement. Let's start with the timeline. At 6:49 a.m. on Monday, March 23rd, something unusual happened in the oil futures market on the Chicago Mercantile Exchange. In the span of a single minute, trading activity exploded. Roughly 6,200 Brent and West Texas Intermediate contracts were executed almost simultaneously. In dollar terms, that's about $580 million worth of oil futures moving through the market in 60 seconds. What made it unusual wasn't just the size of the trades. It was the direction. Every one of those contracts was positioned the same way, betting that oil prices were about to drop. Trading volume at that moment was 6 times higher than normal for that hour of the morning. And at the time those trades happened, there was no public announcement, no breaking news, and no briefing from officials. From the outside, the market looked quiet. But someone suddenly placed a massive bet that oil prices were about to fall. Then 16 minutes later, at 7:05 a.m., Donald Trump posted on Truth Social. In the post, he said the United States and Iran had been having very good and productive conversations, and that the U.S. would pause planned strikes on Iranian energy infrastructure for 5 days while talks continued. The reaction in financial markets was immediate. Oil prices plunged roughly 14% within minutes. The Dow Jones jumped more than 1,000 points. And whoever placed those trades at 6:49 a.m. made an enormous profit in less than 20 minutes. That is the sequence of events. I'm not assigning blame or claiming to know who placed the trades. What I'm doing is laying out the timeline and the numbers, because when you line them up together, they create a pattern that many financial analysts and public officials are now openly discussing. The phrase that keeps coming up is insider trading. Economist Paul Krugman, who won the Nobel Prize in Economics, addressed the situation directly. He pointed out that when people use confidential government information about national security decisions to profit in financial markets, there is already a word for that behavior. He said that word is treason. Krugman then raised a question that goes beyond one suspicious trade. He asked whether it's possible that decisions involving war and diplomacy are being communicated or even timed in ways that allow certain actors to profit from the resulting market moves. His point wasn't that the answer is already proven. His point was that dismissing the possibility outright would mean ignoring what the data shows. A similar concern was raised by Senator Chris Murphy of Connecticut. Murphy reported that roughly $1.5 billion in S&P 500 futures were sold in the minutes leading up to Trump's announcement. In his words, someone made a $1.5 billion market that just minutes before the post went live. Murphy asked a straightforward question: who had access to information about that announcement before it became public? Those questions become more complicated when you look at the broader pattern. This isn't the first time unusual trading activity has appeared around major geopolitical decisions during this administration. Just before the Iran conflict began on February 28th, more than 150 accounts on the prediction platform Polymarket suddenly began placing bets that the United States would strike Iran within 24 hours. Those bets were placed before any official announcement or confirmed reporting. Another example occurred on January 2nd, when a trader turned roughly $32,000 into over $400,000 by betting on the capture of Venezuelan President Nicolas Maduro before that development became public the following day. And when Trump reversed his tariff escalation in April 2025, lawmakers also flagged unusual market activity occurring shortly before the policy shift was announced. None of those cases prove wrongdoing on their own, but they do show a recurring pattern that analysts are now paying closer attention to. Financial experts have also weighed in on the specific trading activity from Monday morning. Tim Scuro, head of energy and derivatives at Energy Aspects, told CBS News that the volume spike around 6:50 a.m. was about 6 times normal for that time of day. He said the size of the trades wasn't unprecedented in absolute terms, but the timing was clearly unusual. Stephen Peepgrass, a futures trading specialist at the law firm Troutman Pepperlock, said the sudden surge in activity right before the announcement would normally be enough to trigger a regulatory investigation. And Ben Schifrin, director of securities policy at Better Markets, outlined the two possibilities. The benign explanation is that traders coincidentally placed a large bet moments before market-moving news. The more troubling explanation is that someone knew about the announcement ahead of time. There's also another layer to this story that hasn't received as much attention. Several individuals closely connected to the administration also have financial interests linked to industries affected by the conflict. For example, Jared Kushner, who reportedly participated in diplomatic outreach to Iranian officials, has been seeking billions of dollars in investment for his private equity fund from Gulf governments involved in the regional crisis. Meanwhile, Trump's sons Eric and Donald Jr. have investments in drone technology companies competing for defense contracts related to the conflict. At the same time, enforcement mechanisms designed to investigate potential corruption have been reduced. The Justice Department's Public Integrity Section, which was originally created after Watergate to prosecute government corruption, has reportedly been reduced dramatically in size. Reuters also reported that a senior enforcement official at the SEC recently resigned after disagreements about how aggressively the agency should pursue cases involving politically connected individuals. That combination, access to sensitive decisions, financial incentives, and weaker oversight, is why some analysts say the situation deserves scrutiny. But beyond politics or personalities, there is a more basic issue at stake. Financial markets only work if everyone is operating with the same information. When someone trades using knowledge that the rest of the market doesn't have, the profit they make comes directly from someone else's loss. Every derivatives contract has two sides. When traders sold oil futures at 6:49 a.m. expecting prices to fall, someone else bought those contracts expecting prices to stay the same or rise. When the Truth Social announcement moved the market 16 minutes later, the sellers profited and the buyers lost money. And the buyers in those markets aren't just hedge funds. They include pension funds, index funds, retirement accounts, and investment portfolios tied to ordinary workers. In other words, when insider information distorts a market, the financial impact often lands on everyday investors who had no way of knowing what was about to happen. Regulators have not yet publicly confirmed whether an investigation has begun. The CME, which operates the futures exchange where the trades occurred, has not announced a formal review. The CFTC, which oversees commodities markets, is still working through regulatory proposals related to prediction markets and insider trading. Meanwhile, prediction platforms like Polymarket and Kalsher have grown dramatically in size. Combined monthly trading volume on those platforms reached roughly $18 billion earlier this year, transforming them into significant parts of the modern financial ecosystem. That growth has also made them more visible places where unusual betting patterns appear around political and geopolitical events. Reports indicate that a trader recently made about $1 million betting on developments related to the Iran conflict on Polymarket. Several newly created accounts have also placed large wagers on the timing of potential ceasefire agreements. Critics argue that these markets could create incentives for individuals with inside knowledge to profit from political or military decisions. Supporters argue they simply reflect collective expectations. But the rapid expansion of these platforms has added a new dimension to the intersection between politics, markets, and financial speculation. When you step back and look at the full picture, the timeline itself is what raises questions. Trump issued threats against Iranian energy infrastructure on Saturday. Early Monday morning, hundreds of millions of dollars in oil futures were traded in a way that perfectly anticipated a market-moving announcement. 16 minutes later, the announcement was posted. Markets moved dramatically in response. Those facts are part of the public record. Whether the sequence represents coincidence or something more serious is a question that only a formal investigation could answer. And that investigation would need to determine who placed those trades, whether they had access to confidential information, and whether existing oversight systems are capable of detecting and prosecuting that kind of activity. Because if insider information is influencing trades connected to geopolitical decisions, the consequences extend far beyond a single market move. They reach into retirement funds, pension accounts, and the overall trust people place in the financial system itself. So the real question here isn't simply who made money in those 20 minutes. The real question is whether markets that move trillions of dollars are still operating on a level playing field. And until someone with the authority to investigate this sequence answers that question, the uncertainty surrounding it will remain. If this breakdown helped you understand the story behind the headlines, consider subscribing. Because sometimes the most important events of a war aren't happening on the battlefield. They're happening quietly inside financial markets before most people are even awake.